Ladies and gentlemen, welcome to the Armour Report. Welcome to the Week in Review. Thank you all for joining me on a Saturday morning to get yourself ready for next week's stock market. What we're going to cover today, as always, the Armour Investing Way. We're going to go over the big picture view of our algorithms telling us when to add risk, when to take risk off. We call that the risk monitor. So we're going to go over what happened last week. Market was a little bit shaky. We're going to see, has the risk monitor changed? If not, what will it do next week? What has to happen next week to change the risk monitor? As of now, we're risk monitor green, which means we're putting capital to work. All right. So we'll go over some of the ins and outs of that. Then we're going to talk about, and I was a little cheeky this morning with that title. Okay. But everybody with a microphone seems to be screaming at the top of their lungs that Bitcoin's going to 1 million. Right? They don't necessarily give you a date of when that'll happen. Some of them tell you it's in 2030, they tell you it's going to happen. I mean, anyway, everyone's having fun screaming so everybody in the blue seats can hear that Bitcoin's going to 1,000, okay? 1 million. So I'm going to throw my hat in the ring and, add, my own cacophony, if you will, of if Bitcoin goes to 1 million, but then silver is going to $1,000 an ounce. Gold, I'm not even going to talk about where that's going. Who knows? All right. So we're going to get into really a chart analysis of silver and what happened last week using uranium as a guide to what may happen next week to silver. That's the key. All right. We're not going to fall down a rabbit hole and debate whether or not Bitcoin's better than silver or gold. That's not the point of this conversation. It's what's happening to silver stocks right now, led by gold stocks. And the uranium action last week. I know it's kind of strange. How's there a connection? I'm going to show you a chart pattern. It's one of my favorites that has a high probability of success, and the reward is worth the risk. And so I'll go over with you how we changed our portfolio at the end of the week to benefit from that next week. If it happens, we'll go over some of the stocks we're buying, some of the stocks at the top of our whiteboard that we may invest in next week. And then I'll get to the Q&A. So don't forget, fill up the message board with your questions, and then we'll just go over them one by one after some discussions here. So don't forget to subscribe if you like this conversation, if you want to be a part of the Armour Report. What we're doing at the Armour Report is creating a virtual hedge fund, okay? Hedge funds that outperform. The best hedge funds do three things. They pool information sources that are highly accurate. They use an overarching strategy with algorithms to help execute. And they have a very strong risk management discipline. So at the Armour Report, you join us. We all pool our information. We share it on the Slack trading desk all day long. We use Armour algorithms to help us know when to execute, protect capital, put on risk, those types of things. And we have a very strong risk management discipline that I talk about all the time on these calls with you. So consider joining us and becoming part of that community. It's a lot of fun. Of course, if you like this, go ahead, slam the like button. I guess that helps me out. I appreciate it. So let's, before I dive in, don't forget, I'm sharing with you what I do with my own personal capital. Couldn't possibly tell you how to invest. I don't know your portfolio. You got to do your own due diligence, figure out if it matches your risk tolerance, the goals, all those types of things that I think, we're all adults in the room, I hope, and you understand that process, but we say at the beginning of every one of these videos. All right, step one, let's make this real simple, real quick. Let's dive into a review of the indexes and what are the algorithms telling us. And there's two indexes that we're watching closely that might change the risk monitor. So step one, let's dive in. Oops, you're looking at one of my favorite all-time chart patterns. Okay, this chart pattern has made me an absolute fortune over the last 30 years of running money. Okay, and so this is Newmont Mining. We bought the asset down here, and it's starting to accelerate. I'll go over that a little bit later in the show. Let's start with the S&P. Okay, so the risk monitor, as you know, those of you who are Armor Insiders, you click on the subscription part of the website. You go in there and you see our 4 tiles up top, risk monitors right here, the date we last changed it. You click on it, you'll find out what the risk monitors are doing when we make any updates. For you guys here, I'm showing you just a visual. Every time there's a risk monitor change, I'm starting to make the colors for you, okay? So it went yellow right here. We started putting money to work. We got aggressively long right in here. Market went up. We actually booked some profits in here. Okay, so step 1, what was that? It's Friday. Let's go take a look at this. What day did we do that? Friday, Thursday, Wednesday, Monday. Yeah, Monday. Right here on this day, and maybe I'll blow it up a little bit more for you, okay? Right here on this day, the market was up that day. That was Monday, and the risk monitor was telling us, and I was sharing this with ARMR Insiders in the Slack room and, of course, on the website, it's time to book profits. Not 100%, not changing the risk monitor color, but we have a specific set of rules in the algorithm that tells us when we believe the risk reward matrix has changed, we book some profits. We call it the profit protection exit. Okay. The indexes were all telling us that on Monday, which was a big up day. The NASDAQ was up 2% Monday, and we were trimming positions on that day. Then the market plummeted the rest of the week. It's not that the, profit protection exit is always that accurate, but it is a good guide to help us manage our risk. That's the point of what we're doing. Like a good hedge fund, we manage our risk. So when we put positions on early and the market rips higher, our job is to take some of the cream off the top, raise the stops to break even, and then we let the portfolio do what it's capable of doing. Thank you, Wim Hof. Okay. So the faster we can get ourselves in a position where we're no longer emotional about the trade, right? We put all of our capital to work at the beginning of a risk monitor green. It pops higher. We take some off the top. I don't care if it's 10% of the position, booking 10% of the gains, 20%, 25%, whatever makes you comfortable. And different market environments will get me to book more or less. Example, if the Fed's adding liquidity, reducing rates, I might only book 5%. I still do it, but it'll be 5%. I'll still carry 95% of the position. In a world like today, I might book 30%. Fed's raising rates. Fed's reducing liquidity. Inflation's getting out of control, right? So Monday, the market pops, and at the Armour Report, we're taking some off the top. The rest of the week, the market sells off, but the risk monitor is not turned yellow or red yet. It's still green. And let's look at why. There's 2 indexes last week that were taken off of our portfolio. So, we have 4 portfolios we manage, one of which is an index-only portfolio, and it follows the algorithms religiously. So we have 7 index algos designed for the primaries, the S&P, the NASDAQ, small cap, and the Dow, okay? And then we have the secondaries, momentum, value, and IBD 50. The value and the IBD 50 got taken out of the portfolio. So that portfolio is in a much larger cash position than our other portfolios, ARMR Dividend, ARMR Growth, and ARMR ETF Swing, okay? The largest cash position right now is in the ARMR Index only. And that's because, and I'll show you real quick, IBD 50 got stopped out. You can see why. We got in here, it popped up. We took 30% off. Maybe it was 25% off of that in that portfolio, right in here. Then it broke down. We got stopped out at break even. We made money on that trade. Back to cash on that position. Not the momentum, value. The value index popped up. We shaved 20, 25% off. Came back down. And really, it was a break-even trade because it didn't pop up enough for us to make any real money out of the value portfolio. Okay. So what would have to happen to get it risk monitor from green to another color? Yellow or red, more negative color. The rule states this: as long as the 4 primaries are still green, the risk monitor is not going to go red. Okay? So the closest index to being taken out of the primaries is the small caps. Boy, it came close. It almost fired at the end of the day yesterday. But because it stayed above the stop right to the end of the day and just hovered on it, we wait till Monday. It's literally going to come down to Monday. If the market gets wrecked Monday, you can be sure the risk monitor will at least be yellow because small caps will be taken out of the portfolio. Don't forget, we sold some of that position higher on Monday. Okay, so we've earned the right to carry that risk over the weekend because we already booked some higher, right? So we're managing our risk. Then we'll see. So if small caps are getting wrecked Monday and it closes that way at the end of the day, so a market that opens lower is not going to take us out and turn us red. But by the end of the day, if we're there, risk monitor will at least be yellow, possibly red. So if we see the NASDAQ, for instance, confirming the breakdown in small caps, and NASDAQ's pretty close as well. It's still above. It's still above our stop, but it's getting real close because we have a raised stop now. We put the position on here. It ran up here. We sold some of it right there on that day. Okay. And when we sell it, we raise our stop to break even, which is somewhere in here. So if it comes back to break even, we're out of the whole thing having booked a small profit. You know, small being whatever, 25% of the position was booked. And so we get out of that position with a profit. All right. Now, the other index to follow is momentum. Because what's going to turn the risk monitor at least yellow is if all 3 of the secondary indexes are stopped out. So small caps already been stopped. IBD 50 has been stopped out. Value has been stopped out. Momentum is still green as it can be. And you can take a look here and see why. Okay. Momentum is actually holding up a little bit better. So as long as it stays above its stop, we're okay. But if momentum takes out the stop and all 3 go red, then the risk monitor turns yellow. If small caps are out, if the NASDAQ is out, well, then we're going to be risk monitor red again. Okay. So that's the risk monitor. Let's move over now to a quick discussion. Okay, a quick discussion about Bitcoin and precious metals and uranium. Okay, so this is what I want to talk about right now. I hope you understand, guys, that my tongue is firmly in my cheek when I create that title this morning and when I start this discussion with you. All right, sure, there'll be a lot of blowback on stock twits because, you know, somebody just doesn't understand what I'm saying. But between you and I, let's just have some fun this morning, okay? In my Twitter feed, I don't know about yours, but in mine, there is just such an enormous amount of squawking from Bitcoin owners and crypto owners, but particularly Bitcoin owners, that Bitcoin is going to 1 million. Tom Lee comes out every single week, it seems, telling you Bitcoin is going to 100,000. Hey, man, you know what? One day he'll be right. You know, and then he'll tell you, I told you so. But it doesn't help you and I make any money, right? It helps him build followers. It helps him, you know, keep his job or whatever, I guess, right? And these people who scream and holler and tell you you've got to buy Bitcoin, doesn't it make you question just for a second why they do that? I mean, I like Michael Saylor and everything, but let's be honest, okay? The man has leveraged his company on Bitcoin. And then he gets a microphone and tells everybody it's going to 1 million. Do you think he's talking his book? I mean, come on, guys, wake up, wake up. The guy already owns a ridiculous amount of Bitcoin, and he's leveraged his company to do it. Of course, he's going to get out there and tell you it's going to 1 million. Now, I'm not even going to debate whether or not it's going to 1 million. This is not a conversation to say, I don't like crypto. Guess what? I have a cryptocurrency portfolio. Okay. It's at a crypto, it's not part of my equity portfolio. It's not part of my stock, equities or stocks, same thing, right? Portfolio. Okay. It's a crypto portfolio. I own some crypto, got some in cold storage. Who knows? Maybe one day it gets to 1 million. That'll be great. But you know what? I'll never come on this channel and browbeat you into buying Bitcoin. Everybody has to make their own decision. Everybody has to make sure it fits their risk tolerance. Okay. But beware billionaires, multimillionaires who come on and browbeat you into buying an asset. I mean, particularly when they already own a lot of it. Now Kathy Wood jumps into the fray. Really? Because she's concerned probably that, she's becoming a bit of a joke on Twitter. So why don't we just join the fray and say, Bitcoin's going to 1 million, right? If only 2.5% of the investing population invests in Bitcoin, it'll go to 1 million. That's her philosophy. Okay, look, I'm not saying these people are wrong. Okay. As a precious metals investor, I've heard this expletive before. Okay. Make an effort. Tell me something I don't know. Okay. If just X% of the population of investors buys gold, gold will be how many, thousands, tens of thousands of dollars, right? It's total static analysis. To sit here and tell you what Bitcoin's going to be by the 2030 is just a joke. It's just a way for me to capture, followers. But it's not in any way helping anybody make money today, now. And it just drives me crazy a bit. As you could see, I'm on a bit of a rant. I hope you don't mind on a Saturday morning. If you really think Bitcoin's going to $1 million of Bitcoin, you don't have to beat anybody up about it. Go ahead and buy your Bitcoin and make your money. But all of a sudden, these people are just so altruistic. They just so care about you and your money. Oh, they're just so sweet. They're such nice people. They're just so kind. They want to make sure you don't miss it. You see what I'm saying? All right, moving on. Okay, so just for fun, if Bitcoin's going to 1 million, where is silver and gold going? I don't know. $1,000 an ounce maybe on silver? Why not? I'm not going to get into that debate. What I do want to get into is a chart analysis with you. Okay. This is one of my favorite chart patterns. And when this pattern shows up and we get an algorithmic entry point, the probabilities are at their highest that we're going to make money and the reward's worth the risk. Now, full disclosure. Okay. I already own them. You don't have to do this. If it doesn't fit your risk tolerance, don't do it. I'm not going to browbeat you. I don't even know where the price is going to go. I'm not going to pretend that silver is going to $1,000 an ounce. I'm not going to pretend that these stocks are going to skyrocket. I don't know. I'm going to be honest with you. All my job is with my capital and what I share with you on these calls, my job is to put us on the right side of probabilities when rewards worth the risk. And then we see what happens. If they hit a stop, I'll be out because I manage my risk and protect. Right? I won't say to you, this asset has to go to $100 an ounce by the end of the year. So hold it while it goes from the 20s down to the teens because it's going to go to 100 by the end of the year. I won't be that guy. Okay? I won't be that guy. You can listen to somebody else tell you that Bitcoin's going to 100,000 as it goes from 65,000 to 30,000, right? And he'll keep pounding away. It's going to go to 100. That doesn't help anybody. So what I'm about to show you is a chart pattern that's made me a lot of money over the 30 plus years of running my personal capital and capital for investors. It's not a guarantee. It puts me on the right side of probabilities and the reward's worth the risk. So let's first go over the uranium charts. And you can see what we did last week. And then look at the silver patterns and understand why we were adding these stocks on Friday. Here we go. All right, that's SILV. But what we're going to start with, okay, is URA. And I just want to go over with you. Well, you know what? I don't want to start with URA. What I want to start with is CCJ. Okay, URA is the ETF for all of the uranium stocks. Okay, but what we're going to do is look at the leader first. CCJ is clearly the leader, making new highs on the year already. And what I want you to see, and you know what I might do here is change the color so that you can see. What we're looking at is a pennant formation inside of a pennant formation. And pennants are my favorite patterns. Let's go over so here's the pennant inside of a pennant, right? On top of a pennant. Let's go over what pennants really mean. What is chart analysis? What are we doing? We're analyzing price movement that shows us where the battle lines are drawn between buyers and sellers. That's all we're doing. We're analyzing price. There's no mystery here. This isn't like a crystal ball or something. It's just where is the line in the sand where the buyers and sellers are going at it. If the line's broken and the buyers are in control, you get an explosive move up because they've completely, completely run through the lines of sellers. And if the sellers win and the buyers are exhausted, they get crushed. Okay, so our job is to find these types of lines, if you will, in the sand. Use algorithms to tell us when probabilities in our favor the assets are going to go up, and then use risk management tools to protect so we don't get run over. All right. So just look at these charts. I'm going to roll through them. So what you have is this pennant here. Every time you get a higher low, which is happening in here, it means the buyers are getting stronger. Okay. And right in here, the sellers start losing firepower. They don't have anything left to sell. They don't. Then it pops up and makes a higher pennant. See that? See the buyers keep getting stronger and stronger and stronger. You see these tails, which means the sellers tried to hit the asset, but by the end of the day, the asset was higher. This is candlestick charts. Okay. Each bar is a day. Right. And then you had that explosive move on Thursday. On the Armour trading desk, we were doubling our positions on Wednesday, right here. Now, the reason we were doing that, just real quick before I run you through the other charts, a couple of things I'll just touch on. Fed minutes came out on Wednesday. On Tuesday, one of the biggest doves on the Fed board, Baynard, came out very hawkish. Then, which was a precursor to the Fed minutes on Wednesday, which told you, when you took all that together, it told me that the Fed is just woefully behind the inflation curve. And we already knew this. We already anticipated this. The Armour Report, our portfolios are full of the commodity supercycle trade starting really in December and early January. Okay. So our portfolios are just ripping higher while the market's going down. The alpha is going like this because we're on the commodity supercycle. Okay. And when we heard that comment on Wednesday, and we talked about it on the live trading desk, if you want to join us, obviously go ahead and subscribe, right? Boom, go like that. Subscribe to the Armour Report. Subscribe to this YouTube channel. Okay. You'll be part of this if you're on the Armour Report. We talk about it as it's happening. All right. Don't forget, may as well hit the like button while you're at it. Okay. When we read those minutes and the market was doing these crazy gyrations, what it meant to me was we've got to double up our commodity positions. We doubled up our gold positions. We doubled up our uranium positions. And we did it really, that was the fundamental reason. But the technical reason is this pattern, okay? The buyers keep coming in faster. The sellers keep running out of bullets, right? So we doubled our position here and had a huge day on Thursday. Now let's go look. I want you to see every one of these charts. I'm going to show you the top 4 names that are in our portfolio. Full disclosure, I already own them, okay? I'm not buying uranium now. The time to buy uranium was right here. This was the bar. But what I want to show you is this pattern, right? You have this huge pennant formation, and then you have a tighter pennant formation building inside of it. And when you come across those tops, the real move is getting started. Now, I know a lot of people will buy the pennant breakout. And hey, guys, there's nothing wrong with buying a pennant breakout, okay? It's just that the risks are a lot higher and the reward is less. The risks are higher because the stop is the bottom of the pennant. So it's got to go all the way down to break the bottom of the pennant before you would realistically stop it. Okay? So with the Armour Report, using algorithms, our job is to get in cheap. So when it blows out on Thursday, I'm not buying anymore. We're not adding to it on Friday. We already had a huge week because the Armour algos get us in early. This is a virtual hedge fund we're running. Now, at a hedge fund, you might have $100 million, $1 billion hedge fund, and you get traders that are on the trading desk, and they each get an allotment of capital, maybe $100 million each, right? But at the Armour Report, you bring your own capital. We have some subscribers, 25 million plus in the market, and some 25,000. It doesn't make a difference. You bring your allotment of capital. We share information. We use Armour algos to execute, and we have risk management rules. That's what we're doing, all right? So right in here, look at this pattern, right? There's the tight formation. We get it. We're buying it right at the stop, right above the stop, right? If it broke down here, we'd be out. Instead, it reverses and skyrockets. Let's keep looking at the charts. Don't take your eyes off the screen because they're exactly the same patterns. Pennant formation, pennant inside. Quad U's hasn't even broken out yet. That's actually underperforming a little bit, right? And then let's look at NXE. Same pattern, pennant inside of a pennant, blowout. I could go on all day. I mean, I think what's Denison? Same pattern. I don't own Denison, but there's the same type of a pattern there. We could go on all day. All of these patterns look basically the same with CCJ leading. Okay. So now let's get to this chart pattern and apply it to silver and gold, but really silver stocks. Okay. But before I get into the silver stocks we're buying, I want you to look at CCJ. In every cycle, there's an institutional favorite. It's the guy with the most amount of assets in the ground, the guy with the largest amount of inventory. Okay. That's what Cameco is. You might tell me there's other smaller names that are great, and I'm not going to argue with you. But the institutional favorite is CCJ. And you can see it because it breaks out first. So it's important for us to notice what's the institutional favorite, how's it performing? And when it takes off, then you can start investing in the smaller names. And CCJ's been leading the pack. So the smaller names are fair game now. Let's go look at, before we go to silver, let's go look at Newmont Mining. I know it's a gold stock. All right. I've been telling you guys about Newmont Mining for the last couple of weeks, but let's just revisit. In my lifetime as an investor, this is one of the greatest chart patterns. Okay. This is a huge. The pennant formation is one of my favorites. The rectangular pattern is another favorite. Okay. Newmont is blowing out of a huge rectangle, making weekly highs. Watch the weekly chart. Okay. And I'll blow this up a little bit. Okay. Huge rectangle, blowout on the weekly level. And I share this with you first because if Newmont's not doing that, I don't really care about the other mining stocks. I don't care about silver stocks. The leader is skyrocketing. That's like the green light. That's like the siren. That's like, the bells ringing. And institutions, obviously, they're moving into Newmont. And then it starts filtering down to the other names, and it gets to the silver stocks. So what I shared with ARMR Insiders, I don't know, 3-4 months ago, is the investing strategy for precious metals looks like this. We're going to start with big cap gold stocks. If we make money there, then we've earned the right to take more risk. Write that down, put it above your trading desk. You have to earn the right to take the risk. You don't just run out there and take massive risk. You start with the biggest institutional names and see if you can make money there. And when you do, then you say, it's time for me to add risk to my portfolio. And that's what this Newmont chart is telling us. Take a look at that breakout. That's institutional money driving that stock higher. So now let's get back to the silver stocks. All right, because what we've done first at the Armour Report, you guys know we were buying these green boxes is where we were buying Newmont. Okay, so we've been buying Newmont all in here. And now we haven't touched it since this breakout. We're just making a ton of money on it. All right. So now let's run through real quick our top gold stocks. And then we're going to get to the silver charts that look just like uranium. It's not that uranium and silver are connected. This is just a chart pattern review. Okay. It's the same chart pattern. But look, okay, Agnico Eagle stocks coming out of a pennant. Look at that pennant formation. Great close to the week. Barrick, these are the top 5 names. Barrick's coming out of a pennant. Franco-Nevada. Wheaton Precious Metals. And that's the last one to end on because this is partially a silver royalty company along with gold. And you can see that pennant that's coming out. Okay? So in case I assume you guys can see that, but let's just draw it together. Okay? There's the pennant. It hasn't even really broken out yet. Okay? This is why I'm sharing these silver ideas with you now. We added them on Friday. Let's see if they break out next week. Take a look at NXC's chart. Look at that pattern. There was the breakout. Now go look at Wheaton. There's the pattern. Let's see if there's a breakout. Look, guys, before I run through these silver stocks that we're buying, let me be very clear. I don't know if they're going up next week. I have a risk management plan. If they reverse, I'm out. Okay? There are no guarantees on chart patterns. It's a battle between buyers and sellers. And if the sellers get exhausted, the reward is significant because the explosion higher happens. So our job is to put ourselves on the right side of probabilities and let it play out. If the stops are hit, we go to cash and we wait for another entry point. If it blows out, we're already there and we're going to let other people mark up our portfolio. Okay? So here are the top names that we're putting into the portfolio. Just look at the chart patterns. Okay? Here's First Majestic. And we'll do it together. All right? Something like that. You know what? Let's put it like that. I think I would do that on First Majestic. Something like that. There's the pennant. Now go look at UEC again. Look at UEC's pennant before the breakout. Look at NXC. Look at the pennant, right? And now let's go look at AG. Same pattern. Same pattern. We want to buy it as close to the stop as we can. If this reverses and breaks down out of this uptrend, we're gone from the stock. We're not going to hold it. Hecla, one of my favorites. You know, I'm going to put it across the tops there. Okay. You can see they have not broken out yet. How about MAG? Okay. How about SILV? There's the pennant. Buying it here, right? If it breaks down, the stop is tight. Okay. Broke down. Didn't work, right? Blows out next week. We already own it cheap and we let other people mark up our portfolio. And that, my friends, is how you make money in the stock market. You let other people mark up the portfolio. You're not the guy chasing. Okay. I promised that I would go over, you know, I guess some of our additions to the portfolio. We're going a little over. It's 36 minutes. So let me just run through some of the names we added last week and what's on the top of our whiteboard, and then I'll get to your Q&A. All right. So just a couple quick reviews here. What we added last week and what we may add next week, and then I'll get to your questions. All right. So here we go. You already looked at the silver stocks. You know we added those last week. Very interesting group that's breaking out right now is the biotech pharmaceutical group. So let's start with this. We own AVAV here, and AVAV has been an unbelievable winner for us in our dividend portfolio. We're collecting a 4.5% yield in AVAV, and the stock has gone to the moon. Okay, paying for a lot of other dividend positions. I mean, we're just going to collect our yield in our dividend portfolio, and we're going to have, you know, significant capital gains. Right? That's like having your cake and eating it too. So there's other names that I've missed. You look at that chart and you say, how the heck could you not own Bristol Myers? I mean, obviously I should have owned Bristol Myers down here. But let's go look at what we added last week. I just could not stand missing Regeneron. You just don't see a pattern that looks this good on a big cap name like that and not trade it. This is a massive pennant, and there's the breakout. I mean, we just couldn't miss that. Here's one of my all-time favorite stocks, and that's Illumina. We trade this all the time. For those of you who are, you know, new to the Armour Report, I've been making money and investing in and trading Illumina for better than 20 years now. That's not a joke. That's a serious number. That's not hyperbole. So I'm always looking to find my way into Illumina. I think it's a phenomenal company. I think, you know, fundamentals are great. Stock got wrecked because of the market. I'm really, so right in here, we added it, and it hasn't even started yet. That chart doesn't look great. And really, it's more just we made money here. We bought right there, made that money. Then we bought it right here, made that money. We have stops up here. So we book profits. When we have blowouts to the fourth standard deviation, we book profits and raise our stops, get out, start again. Ran up here, broke down. We got out, booking our gain, waited, putting the position back on there. And really, because we're seeing a move in so many pharmaceutical stocks. Biotech, I can't even show you all the ones that are moving, but I'll just end with, here's another example, Boston Scientific. This is just like a huge cup and handle and a conservative name. There's just so many of these. And then, of course, Hologics. We've been stalking Hologics forever. Look at the pennant breakout. Okay. So we're on all of those names, pharmaceuticals. So while the stock market is struggling, while the risk monitor might go red, what we are seeing is money funnel into defensive type of stocks like pharmaceuticals. Utilities are going through the roof. Real estate investment trusts are working. Commodities are going through the roof. So there's a real chance to create alpha in this market. You just gotta take it. A couple of thoughts at the top of the leaderboard for us. Don't forget Deere. We already own Deere. We increased our position size on Thursday. Okay, so we added to Deere right here. And that's just a pennant formation breakout, pullback. That looks great. I don't own Caterpillar, but I really want to. If it breaks out of that pennant, I'm going to own Caterpillar. Okay, we have our eye on Target. Target's a pretty interesting looking chart pattern. And I'm going to end on this note. I just can't go over all of them, but take a look at for our dividend portfolio. We have an ARMR Insider that gave us this idea, and I just think it's brilliant. I think it's a 3+% yield. If you look at the defensive stocks that are running, Kroger, Walmart, Albertsons. I mean, all of those type of grocery store chains. This is a REIT that owns properties that are anchored by grocery store chains. This is like a no-brainer. This is for a dividend portfolio. Now, I'm just looking for an entry point, and I might just have to stop staring at it and add that next week to the dividend portfolio. Those are my thoughts for today. Thank you for giving me the time. Let's get to your questions. All right, Dennis, what do you got for me? Good day. Dennis, how are you, my friend? Zim. Okay. Zim to me is not a pure dividend stock. I know that they pay a dividend, but when I try to build a portfolio of dividend stocks, I don't want too much volatility in them, except for upside volatility, right? Like when I'm buying AVAV, I mean, I didn't think it would skyrocket like that. But shipping stocks to me are not pure dividend stocks. It's like, I'm not telling you not to add Zim, but it's a shipping stock and it's going to have a high degree of volatility. So that's not a pure dividend play to me. Pipelines are a pure dividend play. Utilities are a dividend play. Pharmaceuticals, because they don't normally, do what AbbVie's doing. They're a lower beta play. Maybe that's what I'm trying to say. So just be careful if you're building a portfolio for dividends and you're looking at special dividends. Don't forget, there's a difference between a dividend schedule that REITs and pipelines pay, and which is, by the way, based on highly probable income into those companies. Utilities, think of these utilities, REITs, pipelines. They all have customers that have long-term contracts that pay, that create the dividend yield. Okay, shippers and Rio Tinto, BHP, Valley, these all have high dividend yields, but a lot of those yields are based on very volatile, what am I trying to say? Business models, okay? And so the dividend may not be as sexy as it looks, depending on what goes on around the world. So just be aware of that, all right? I would put Zim into a portfolio, but I would put it into a growth stock portfolio and be happy that I was picking up yield. I wouldn't put it in my dividend portfolio. That's what I'm trying to say. Tech Monkey, how are you? Let's take a look. Wendys. I don't like that chart. Nothing excites me there. Yum. We're just going to go over chart patterns now together, okay? I don't see anything in Yum that would excite me. I'm looking for patterns that work. So you like the restaurant stocks, I see today. I'm not going to debate fundamentals with you right now. I'm just looking at chart patterns. That looks a little bit better. There's a rounded bottom coming there, and you could argue that maybe this is going to break a long-term downtrend, something like that. Maybe it already has. So just pure technical analysis, that would be the stock to own, with a low of the 50-day moving average being your stop on QSR. That's how I would look at that. And I wouldn't touch that. That looks just god-awful to me. Also, Deb, don't forget, Deb, whenever you're putting stocks in your portfolio, when you're building a portfolio, it's an opportunity cost of money, right? You only have so many dollars to put to work. Where are you going to put them? So you want to high grade the portfolio to the best fundamentals with the best chart patterns. And even if you have an idea out there of like maybe restaurants is a good idea or something, at the end of the day, that could be a whiteboard thought. And it might end up being true months from now. But would you replace what's in your portfolio with those chart patterns? That's my question. Okay. I would rather own, I'd rather own that chart pattern. This is, how about Lockheed Martin? I'd rather own Lockheed Martin. This is a huge pennant breakout Lockheed Martin's making, right? Ran up to the 4 standard deviation, put in a tight, a pennant base, testing the 50, holding the 25, blowing out. So if I only had X amount of dollars left to invest, I'd rather go after a name like that, in my personal opinion. All right, what are your thoughts on CHX? JJ, how are you, man? Nice to see you. Champion. Again, I don't know the fundamentals, so I'm not going to go over fundamentals with you. We're just looking at patterns together. This is a nice cup and handle. And again, I would say if I was looking to buy this, I'd draw the tops, something like that, right? And if it breaks out of that pattern, I'd be willing to put some money to work there. You know, and if you wanted to add it down here before the breakout, you would use the stop of Thursday as your stop, and you would put some capital to work right there and say, okay. And you can always put, you know, half the trade on here, and when it blows out, finish it off. You know, that's another way to go about it. Interestingly enough, we added REG on Friday. Okay, so we trade REG, or bought it here, sold it here, we bought it back, and we just added it right here. That's just such a pennant on top of a bullish consolidation to me that I've got to be a part of that. If it takes out the low of Thursday, I'll be out of it again. And really, I'm adding it back because of what's going on here. My favorite name, and this is my only drilling stock until I added REG. This is my biggest position in the drilling space, right? HP goes into these 45-degree uptrends that can last months or years. It's like a beautiful trading stock when the institutions get on it. And it just grinds higher and grinds higher. If it goes into that type of a move, then I'm going to want to own REG. So I put that on. And of course, if the drillers are going up, then something like Oceaneering theoretically should follow. So there's nothing wrong with that. I would just rather own the drillers. So fundamentally, I'd rather own the drilling stocks instead of the servicing stocks. But there's nothing wrong with that pattern. Broke out, pull back, holding the 50. I can understand putting money to work there with the stop below the low of Thursday. And I completely agree with you, JJ. Completely agree. Anytime a government goes out there and taps the strategic reserves and oil prices go down for a week, that's the time to be buying, more energy, because it's like the opposite of what you think. When the government is actually tapping the reserves, that's a buying opportunity. When the government is filling up the reserves, it's a selling opportunity. That's just always the way it is. There'll be the story, oh, the government's buying oil to put it in the reserves. Better sell your energy stocks. It's always like that. All right. I did not add Cloudflare to our portfolios. I wanted to. I tried to day trade. It didn't work, and it never got it into the portfolios. Neither did Datadog, which was on my list, and as you could see, broke down. CrowdStrike is my favorite name in this space, and even CrowdStrike is struggling, and I've booked a profit on that. We bought it in here. It went up. We made some money on it, and so right now I'm out of it. Even though my stop is here, I should probably still be in CrowdStrike, but I took that off the table because the whole group is just really struggling. And you know me, I like to invest in group moves. Group moves show you where institutions are going. I don't like to try to just find the one guy going up while the rest are going down. Thank you. I figured I'd bring it for you guys this morning. KC, thanks for that. I appreciate it. Okay. Oh yeah, EQIX. I always like this idea, and I never own it. EQIX. Equinix. This is a data center REIT. This is always something. I got to put this back on my list. Thanks for reminding me. I don't know. I'm looking at the pattern. I don't see an entry point there. I don't see it. But I do like this company. I'll try to find my way into it. I can't pay for that up here, so I'd have to do some work on that. That was a really good chart pattern here. The place to buy that's right in here. It blew out. You would have booked some profits, been stopped out. It comes down, makes a double bottom, blows out somewhere in here. Really the double bottom is where you'd add to it, right? I wouldn't chase it in here now, though. Erez, how are you, my friend? Drillers keep walking up. Okay, WFRD. It's a good looking pattern there. And I know, Erez, you were all over Tidewater. It really blew out. So it's not that you can't make money in these names. You certainly can. The chart looks pretty good. Maybe we'll do some work on that. And add that. How about Neighbors? What's Neighbors looking at? Oops. I got to get Neighbors back in the portfolio. This is just stupid money right here. That's a perfect breakout. And then here's the high tight pennant on Neighbors. I got to put this in the portfolio, set it and forget it. If the stop gets hit, I'm out. And if not, that's my third drilling stock. That's what I want. Hey, Mo, how are you? Hecla market cap, 3.5 bill. Okay, those numbers don't matter to me. Okay, I don't make my investment decisions based on those particular fundamental numbers. It's not really apples to apples. There's nothing wrong with FSM. So don't let me talk you off of that. If that's your favorite name, Mo, go at it. I know we've had these debates before. I think one of your favorite gold stocks is El Dorado, right? And I tell you that I don't want to own something that's got assets in Turkey. But if you're comfortable there, go ahead and do it. Clearly, if you look at El Dorado and you look at Newmont Mining, which that was kind of our debate, Newmont Mining is running away with it. Okay, so when you talk to me about Newmont Mining versus El Dorado, so El Dorado is not even close to a new high, right? And here's Newmont Mining. Okay, Newmont Mining is skyrocketing. Okay, so now we look at Hecla. The bigger cap name is making a pattern that looks like this to me. And so I go with the favorite chart pattern with the bigger cap name. I don't. Here's another thought for you. The biggest cap name, bigger cap, is attractive to me because that's where institutions invest. And I like to put my money in front of or alongside of institutional money. Can you hit a home run buying a meme stock that a bunch of people on Wall Street bets are buying? Sure. Go ahead and do that with your money. I don't do that with mine. I protect my capital first. I capture my upside second. And I feel more comfortable owning big cap institutional favorites first. If I start making money on those names, then I can start going down into the smaller cap names. But at the end of the day, throughout my life, the reward is big enough for me in Newmont and Hecla and the bigger cap names versus the risk that I'm taking. I don't have to be that guy that makes the incrementally more amount of money because the small cap skyrockets. Okay, I'm glad it skyrockets, but I'll be making more than enough money in my institutional favorites. And that's usually where I stay. So it doesn't mean that I won't do an FSM, but PE ratios and all of those things really mean nothing to me when it comes to investing. I know it sounds crazy because that's what they teach you. PE ratios matter, but they just don't. And I can just show you example after example after example of PE ratios that kept people out of the greatest stocks. When it comes to mining companies, it's really more What are the assets in the ground? How accessible are those assets? What's the grade of those assets? High grade versus lower grade. Those are all the things that really matter to a precious metals investment, not what the PE ratio is. All right. So anyway, those are my thoughts there. But I don't want to talk you out of FSM because, I mean, look, FSM's got a fine looking chart pattern. Okay. Let's just talk about the chart pattern and not the fundamentals. The whole group's going up. Okay. And FSM is in the process of breaking the downtrend, maybe right there, right? So that looks great. I don't think we have to debate one or the other. You go ahead and buy your FSM. It's right here. Let's see if it breaks out. If the silver stocks are going up, theoretically, this stock should follow, right? And then there's the uptrend. So you're buying a bottoming wedge that should spike. If it breaks down, you got to get out. It's just that simple. Greg, good morning. My thoughts on Deere is that I doubled the position on Thursday right here. That's my thought on Deere. I totally agree with you. It looks great. And I know on our trading desk, there are some insiders who like AGCO, and you know they're probably right. I mean, these two stocks go together. So it broke out of its pennant, pulled back to the 50. There's your shot at AGCO. They're the same type of companies. See, I think the institutional favorites on silver. Well, first of all, Wheaton Precious Metals. Okay, that's a royalty company that has, I think it's 60-40, 60% gold, 40% silver. Maybe those numbers are changed since I last checked, but that's the number one institutional favorite there. Okay, and then I think you go to Ag, you go to Hecla. Go to well, I don't know if I'm getting too deep here. SILV. I don't know if Silvercrest is a name, but maybe Ag. And what about Coeur d'Alene? I haven't seen that one in a while. No, that looks terrible. No, I think it's really Ag and Hecla are I think those are the institutional favorites. I mean, I could be wrong. Do you see a Pennant? I do. Yeah. I mean, that's why I have to own Neighbor. I'm going to have to buy the stock. I can't miss. I just can't miss. I'm going to have to find room in the portfolio for Neighbors. I'm writing that down right now so I get some Neighbors next week. I keep pussyfooting around with this thing, and I got to just own that chart. Exactly. A pennant on a pennant. That's what's so compelling to me. And I feel I have to keep repeating this so that you guys don't forget. That doesn't mean they have to go up. Pennants are just an explosive chart pattern. They can explode to the downside too. So you got to have a stop in. You can't force your will in the market and say, but that looks so good, it should go up. If it's not going up, you got to get out. We put ourselves on the right side of probability when the reward is worth risk, and we follow a risk management rule. Okay? Don't forget that. Yeah, I mean, let's go over some copper plays. All right. So there's that kind of copper play. There's obviously FCX is the biggest copper play. I'm looking at TECK. This is not giving me an entry point. And then of course I have the base metals. We own BHP. We own Rio. We own Valley. I mean, these guys, they own a lot of different base metals. SPPP is the Sprott Physical Gold, Platinum, and Palladium ETF, which I don't own, and I'm not going to own. What is this one? What is it? SBSW? Sidevine Stillwater. That looks like the right entry point. But I'm sticking with gold and silver for me. All right. Do you think we see? I don't look at Philip Morris as overvalued or undervalued, or Altria as overvalued or undervalued. Deb, this is part of our dividend portfolio. So let me just go over the dividend strategy again. It does not follow the risk monitor. It does not trade intra-week. We set up positions. We have a weekly stop. We check them on Fridays. If it's above the stop, we don't look at it. We just keep collecting yield. Every now and then I exit something during the week. It's rare. I did it this week. Okay. I did it this week, but it happens maybe 5% of the time. All right. But I put a position on, for instance, Blackstone on the breakout here at a 4.5% yield, and it reversed and I took it out. I didn't wait for the end of the week. Okay. But typically, I'm not going to look at this during the week. That's first of all. Second of all, I don't care. I don't care about PE ratios. I'm not looking to trade it. I'm not trying to figure out, is it overvalued or undervalued? If I could literally hold Altria in my portfolio for the next 5 or 10 years and collect a 7.8% yield, I win. I win. I don't even care if the assets, if the original investment's flat, and I just collected 7.5% at a dividend tax rate. It's a completely different mindset for me. You'll never hear me talk about the PE or overvalued, undervalued, or whatever. Every now and then, if the stock goes up so much that I'm long-term on it, and it goes up so much, and I've held it for more than a year, and I look at that and say, oh my God, it's completely in the stratosphere. And so I've basically collected 10 years worth of dividends and capital gains. I might sell it and book a profit and then rotate the money into something else. Okay. But that happens rare. I did it in Exxon, and I'm thinking of putting Exxon back in the portfolio. It's just making a high type pennant and breaking out and paying a 4% yield. I still own my CVX. I've never sold it. I bought it here. And it's just doing this. And there's a whole new high type pennant. So I'm not buying Philip Morris here. I'm not Altria here. The entry point was here. So don't forget, what we're trying to do when we're buying dividend stocks is we put them on our whiteboard, names that we love and we like. And it could be on the whiteboard for 6 months because it goes up without us and we just miss it. And then there'll be some piece of short-term news that'll wreck the stock for a couple of weeks or a couple of months and jack the yield up. And that's when we pounce, put it in the portfolio, and hold it as long as possible. Hi, Viola. How are you? Kratos. Oh, well, I was really bummed at how Kratos closed the week, and I exited the position. As you could see, it hit our stop here, this white dashed line. So it looked like we had a great breakout going, and it reversed. I'm not going to sit and hold it. Look at this weekly chart pattern. I'm glad you brought this up. Okay, that's a massive negative candle on Kratos, and I don't know why. Maybe they're about to make a bid for AVAV. I don't know. But the stock, that was terrible close, so I'm out. If it reverses, it goes back up next week, I'll get back on it, but I can't hold that position. So I'm glad you bring this up, because whenever I talk about anything that I think is exciting and you hear me talk about it, and we all get excited about it, I have stops. It hits the stop, I'm out. It doesn't matter how excited I am. It would be very disappointing and very sad, but it's possible that uranium implodes next week. I'll sell them. I'll go to cash. It'll be an ugly day, and I'll go to cash. Okay, you can't force your will on the market. You have to have your risk management plan set up before the storm. If you don't know mentally how you're going to exit before the storm, when you're in the midst of the hurricane, you know what I'm talking about? That awful day where everything's imploding, you'll be that deer in the headlights. You'll just be staring at it going, well, how could this be? What do I do now? And you just get run over. And by the end of the week, you're just like ruined your entire year's worth of performance. You can't do that. Know what your exits are before you ever buy something. And exit with ruthless precision to protect your portfolio. Stocks that go up never hit the stop. They just run. Something's challenging your stop. Something's wrong. Okay. Pan American. I think you mean PAAS. Not right now, guys. There's a pennant forming in Pan American. Pan American's got some issues because of where their mines are, and that's why the stock has been underperforming to such a degree. You could argue they're not in politically safe areas, and that's why we've been avoiding them. There's a couple of mines that are in question in South America, and it's caused a problem. But that pattern looks really good. So maybe we got to do some research again. We'll talk to Silver Fox about Pan American and see what he has to say about it. Our ARMR Insider, who is our precious metals guru. And as an aside, my father, I've been working with ever since I got in this business. So we're going to talk to him next week and see what his thoughts are, up-to-date thoughts on Pan American, because that is a nice-looking pennant, and it's usually, who asked me about what the institutional favorite is? It's usually Pan American. For a long time, Pan American was the institutional favorite. That pattern looks really good. I'm going to have to chat with Pop about that and see if we can get an approval to put some money to work there. Hey, Lena. Nice to see you. Yeah, there's no doubt Palo Alto is a leader. I just can't find an entry into Palo Alto. I just keep missing it. I should have been buying Palo Alto right here. It touched its 200-day, blew out, pulled back, and I should have bought it right here, and I didn't. And now I'm not paying up for it. So, maybe I'll get it next time. I still like MSOS. Yes, I do. Whoops. All right. And just to be clear, okay, Schumer bill coming some point this year. Greg, I hope you're right, but I don't invest based on what politicians may or may not do. Okay. So let me just, make sure that's clear. I don't spend a second, not even a tiny second, not even in the middle of the night and it's 3 a.m. and I'm laying awake in bed thinking of stocks. Do I spend a second thinking of what Chuck Schumer is going to do and what politicians are going to do with the Safe Banking Act? Not even a second. Because number one, we're never going to know. And number two, politicians are total idiots. So what's the point? How can I invest like that? All right. So I hope what you're saying is right. That would be great. But all I care about when it comes to this chart, okay, is the low that was set here. Remember that we had that conversation? It was a 4-bar reversal, 4 days up in a row, which we haven't seen during the entire sell-off. So there's the low. And I should, I guess I can move this down here. It's a little confusing, but there's the low, okay? And as long as that low holds, I'm going to be long MSOS. And if it breaks out above the 50-day moving average, I'm going to double my position. And what's going to be happening is, as it's breaking out, is that there'll be a whole bunch of congressmen probably buying cannabis stocks because they have inside information to what they're going to end up being passing, right? Right. There's no such law against inside information for congressmen, right? We should all become congressmen, right? Nancy Pelosi shows us how much money she can make with inside information. It's brilliant. So none of us are allowed to have inside information, but the people who write the rules are. That's lots of fun. So the only way for us to deal with that, reality is to look at charts, watch how they behave, recognize when the behavior is changing, like 4 up days in a row, which we haven't seen in over a year, and realize something's happening there. And then when we break above the 50-day moving average, increase our position size, raise our stop. And then when the thing starts to run, by the time they actually pass a bill, these stocks will already be up big. We'll already be making money. Okay? So anyway, that's my thought there. Thanks. What do you think about WU? Western Union. I don't know. I got to look into that. That's interesting. certainly its weakness. I don't know. It's not on my whiteboard. It's, anybody ever use Western Union anymore? I don't know. It just, I guess some people do. What's the dividend yield? 5% on Western Union. Huh. Maybe. All right. I'll do a little work on that and see if there's any reason to own Western Union, because the 5% yield is interesting and the stock is down big. That's how we like to buy dividend stocks. %90 of people worldwide live within 5 kilometers of Western Union. That is an interesting statistic. I would submit to you that at one point, 90% of people around the world lived within 5 kilometers of a hitching post. I'm not sure that was a reason to invest in hitching posts. You know what I'm saying? I just don't know. I don't know. One more thought on that, LD. I think that the investing stories that I like are like, you want to invest in a company before it gets to the statistic that you just mentioned. Like when there's when Starbucks is a concept in the early 1980s and it goes public in the 1990s, I think it was, or late 1980s, it went public. That's when you want to own Starbucks, because they're going to take their theme and they're going to open restaurants all over the world so that they're on every single corner. And you want to ride that stock while they're opening all of those stores, right? Because it's driving earnings, driving revenue. And then at some point, Starbucks gets too big. They're already on every corner. They can't drive earnings and revenue anymore. All they could do now is what? Increase price of coffee. And so the growth story is dead. I know you're talking about this as a dividend stock, so maybe you could just milk Western Union and collect the yield. But I'm just saying, normally I try to invest in companies that have some sort of upside in the story, and that particular statistic doesn't make me feel that way. Plug Power. I don't know, Deb. I know the story, Plug Power. I listen to the conference calls, every couple quarters, and I always come away saying, nah, the fundamentals, they just don't compel me. And then the chart pattern's not doing anything that makes it interesting to me. It tried to break out and reverse. Honestly, Deb, it's kind of like Kratos. It looked like a winner in the beginning of the week and total failure at the end of the week. That's suspect to me. That's the kind of a week that leads to real ugly selling. I don't. I've thought about it. I haven't gotten any exposure. What is it? BRK to any insurance companies, and it's been a big mistake of mine. Silver Fox has been all over the insurance companies, and he's making money in them, and it's just, they're great investments. And this was the entry point here, which I missed, and I'm not going to chase it now. Oh gosh, guys, I'm exhausted. I don't know about you. That was lots of fun. It was a fun Saturday. Thanks for joining me. I wish you all a wonderful weekend. ARMR Insiders, 8:30. I'll see you Monday morning. Get ourselves ready for the day. We're fully invested. We're full of commodity super cycle. And so I'm a cat in a hot tin roof. I'm monitoring the risk. I'm monitoring the stops. If we have to change, we will. Let's see what Monday brings. Everybody have a great weekend. Take care, guys.